couple of months ago and we were thinking about what these discussions should be about, one of the things that both he and I agreed was that you'll find millions of books on how to buy, on frameworks for analyzing companies that are prospective investment candidates and so on. And we heard some discussion today about how there are books written on how you select a discount rate. Forget DCF. So, that's really second level thinking, as Howard Marks may have put it. Clearly, I'm incapable of that. But on selling, I've been around for 30 odd years, 26 odd years in the stock market. And I've read only 2 worthwhile books on selling. And that says something about how little attention selling has received as an idea which can be used to enhance returns. People don't think that being smart in selling counts. It's not worth the effort, obviously. Neither the authors nor the practitioners. The stock is not your wife. A lot of us have such great attachment to stocks that we own that it's amazing. And I'm one of those. I've owned a stock for 21 years and that stock has kicked me quite often. I've had really bad dreams about it. For 10 years, that stock compounded at a rate of 4.5%, including dividends. And it's one of the great names in this country. And I've hung on to it. It shows you how stupid I am. So I'll start with Shiva because he actually made a reference to it. So how important is it to have a contrarian instinct to be smart in terms of your selling decisions? Is it important to think in a contrarian fashion? Or is it not essential?
Well, I think definitely, the smartest people are the people who have a different point of view. And if, everybody is stampeding into or outside the room, you don't want to be part of that crowd. But I think while it's easy to say that, mentally it's extremely difficult, both in a bull market as well as in a bear market. For example, reference was made, repeatedly to iShares, how well it is done. Now, the reason why it is done well and the reason why people probably bought initially are different. And, the stock has continued to climb, and climb. We have here people who've been holding on to a stock like Hero Honda, who's done exceedingly well over 20 years. And today we've reached a point where, just on the back of the success of, the Enfield, iShares has caught up in terms of market cap something like a Hero Honda. Now, the company looked expensive, at maybe 10,000, looked expensive at 15,000, probably looks even more expensive at 20,000. But again, I think we tend to use the price movement as a guide rather than applying, our mind and deciding on whether the stock. I'm not saying it is a sell. Of course, a lot of us got off very early and probably that was a mistake. But I think we need to reflect on this because the same people who think it is good to hold on the stock could have bought more when it was 5. They didn't. Probably they. So what makes it a better stock at 20 than it was at 5? So we definitely need to think differently. And while it's easy to say, it's very difficult to do in practice because you don't want to sell something which is moving your, NAV, for example. So obviously, it's a tough thing to do, but something which we should cultivate.
Can I, from what Shiva said, there was an interesting point that he raised. Can I ask you to take that up? Because I think it extends the idea of how you sell smart. What is hold? You're a broker, right? So, no, please, no sarcasm intended.
Only brokerage in the country which doesn't have a hold.
Which doesn't have a hold. So you see it there. Is that your answer? That if you're not willing to hold a stock, right, this should be a sell, right? So if you're not willing to buy more at a price point and hold it, then clearly something in your mind should get triggered off. You should be asking yourself that why am I not willing to buy at this price? I can see Ramesh looking perplexed, so we'll get to you.
So look, I mean, on your first point of contrarianism, I don't know whether contrarianism per se is the necessary trait for getting selling right, but I do believe that independence of mind is necessary. So it's not necessary that
you have to be contrary.
You have to go against the crowd, but you definitely have to be able to think very differently from everybody else. Now, one of the benefits I perhaps have, and perhaps one of the only benefit I have relative to the other legendary investors in this room, is I get to see several of them in a given week, a given month. And one of the things I've noticed is it's good to start worrying about a stock or indeed a country when you start seeing dissonance in logic.
What defines discipline in selling, and how do you deal with greed?
Chandrakant Sampath, who is a very distinguished investor, which we all know, gave me this trick when I was battling with Infosys during that time. Once you judge that a bull market is nearing its end, and trust me, if you pay attention, everyone knows. I don't think anyone I knew, any smart money that I knew, was fooled by the 92 top, by the 2000 top, by the 2008 top, and I mean that very respectfully. I think we all kind of figured it out, right? So he said, this is what you do. When you know the market is insanely overvalued, it can't sustain, the public is giving you tips, the panwala is giving you tips, everything is irrational out here. What he suggested to me, I didn't follow it at that time, but it was the sanest advice. He said, okay, the bull market could last 2 weeks, could last 6 weeks, okay? It's not going to last longer than that. That's pretty obvious, right? So start selling 10% every week. At a fixed time, come in at 12 o'clock every Tuesday and sell 10% of your Infosys. Your average price will be okay. And that's, if I'd done that, that would have really been good. It's not easy because every day the price is going up, so you get seduced by your own logic.
So you're saying be mechanical. Have the discipline by putting in place a mechanical rule to execute.
At some point at the top, you want to do that.
But Shiva, what are your thoughts on, selling early, and how do, people who are practitioners, how do they deal with this ability, the need to conquer greed, basically?
Greed overtakes all of us, and we will be overtaken by events. So I think it makes sense to put in place something which will force you to, if not sell the entire exposure, at least to reduce, like Ramesh said. But I think this mechanical selling of 10% and slowly getting out of the portfolio, I think that's as difficult as guessing the top, because I never knew that the market was going to peak out in 2000 or 2008. I didn't know that. But I knew both in 2000 and 2008, at least in 2000, some of the stocks which went up were good quality stocks, for example Infosys. So there was that dichotomy, should you sell a good quality stock because it's insanely expensive. 2008, while I didn't know it was going to top out, it was the poor quality stocks which were massively overvalued. So I think the situation was totally different, and the choice for the fund managers was much easier in 2008 as compared to 2000. But if we try to, I don't think any of us are that smart to catch the absolute top and sell at the best possible price. So I think when we think that, or the numbers tell us that these stocks are overpriced, insanely overpriced, I think we should sell, irrespective of what happens tomorrow or the day after.